Hey everyone, Couch Investor back to another video for today. So let's talk about the market's reaction after Nvidia reported earnings, where sentiment will be going towards the end of this year. Would there be better options out there to play the AI play, or is the AI bubble basically bursting right now? Now, Fed Chair Jerome Powell will be speaking, Jackson Hole thing. In my opinion, just like last year, there's a lot of hype, and then he just says the same thing we've heard before, so I'm not really paying that much attention to it. But what has happened since Nvidia reported earnings? Well, we had jobless claims, so they dropped to 230,000 versus 239,000 in the previous week. They were expected to rise to 241,000. Furthermore, durable goods orders from the Commerce Department declined more than expected, down 5.2% in August. They were anticipated to fall 4%. Now, of course, with unemployment being extremely low right now, everybody is still in a limbo, right? Inflation is still high but dropping, unemployment rate is still extremely low, interest rates are still high, maybe another rate hike has yet to come. It's a very strange situation because if you want to see interest rates go down, then the Fed is probably looking at unemployment rate go up. But if unemployment rates go up, that's not really good for the economy, now is it? Of course, if you just look at the stock market, then yes, unemployment rates goes up, then cause an effect that will cause the Fed to maybe do some rate cuts. The market loves that, stock markets go up. But for the economy, that's not really good. You don't really want to go into a recession. So we're really in a weird situation right now. We're going from inflation is transitory to we're going to a recession to there is a recession to hard landing, soft landing, no landing. Pretty remarkable. Anyways, let's wait and see what the macro does. Right now, let's focus on specific companies. You can always take macro with a grain of salt because it is ever changing. Now, with regards to Nvidia specifically, I just want to remind all of you what Nvidia was doing at the start of this year, the state of Nvidia at the start of 2023. So this guy, Couch Investor on X, you should definitely go follow him. So of course, the numbers from this quarter, incredible 88% revenue growth quarter over quarter, EPS 202% growth quarter over quarter, gross margin 5 percentage points growth. Now they expect revenue to be $16 billion in Q3 and have increased an additional $25 billion to buy back shares. And this is a quote from them. We plan to continue share repurchases this fiscal year. So they don't really care that their shares are extremely expensive. Now, as a reminder to everyone, in February 2023, so Q4 fiscal year 2023 for Nvidia, Nvidia's revenue was $6.05 billion. That was down 21% year over year. This turnaround story is one for the history books. It is pretty remarkable, right? At the start of this year, just over $6 billion in revenue. Next quarter, they'll do $10 billion more than they did in February of this year. It is a turnaround story for the history books. And so the question everybody is asking, how sustainable is this growth going to be? Do they have a backlog of 2-3 quarters? Do they have a backlog of 2-3 years? How much is already baked in, etc., etc. Now, of course, with the stock being over, with the company being valued over $1 trillion in market cap, a lot of it is already baked in because otherwise it wouldn't make any sense. But looking at their growth rates right now, a lot of it is justified, but it is expensive. We're going to compare it later on to the likes of AMD and Intel, which have been hit much harder, and they too can benefit from this AI cycle. Because remember, Nvidia is dominating right now, which means that their clients are probably paying a premium price for their GPUs, etc., etc. Which also means that if there is another option out there, and it shouldn't really be much better than Nvidia, if it's close to what Nvidia is offering, but the price is much better, expect a lot of people to go for that option. And of course, then you can maybe expect Nvidia to drop their prices as well, because I believe there was a report out there that Nvidia is making over 100 or maybe even more profit on those sales, which again is pretty crazy. But hey, if you're the dominant player out there, if you're the best of the best, you have the hardware, you have the software, things that they've been building for decades, I mean, okay, maybe that's your right. Now, switching over to the market sentiment a little bit. By the way, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We're on our way to reach 30,000 subscribers. So thank you very much for all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So there is a latest Charles Schwab trader sentiment survey that revealed that more traders are now more bullish on the US stock market in the next 3 months than they were in the second quarter, growing from 32% of the respondents to 44%. So, midlife and older traders, theoretically those with the most investable cash, logically, are the most bullish on the market, 49% to be precise. Overall, 51% of traders think it's a good time to invest in stocks, mutual funds, and other equity-based investments, despite treasury yields and other safe cash-like investment paying big. That's up notably from 41% in the second quarter, again, despite shaky-looking markets in August. While traders certainly don't feel we're entirely out of the woods yet, when it comes to an economic downturn, we're seeing an influx of cautious optimism. And I do agree here. Now, I'll add more information, of course. Yes, I do think that stocks right now are in a very good place, a better place than what were feared at the start of this year, but a lot of them are very expensive. So, in what type of market are we in today? In my opinion, a stock picking market. You have to pick the right ones. Of course, if you already own one of the big winners of the last 8-12 months or so, that's fine. Keep them in your portfolio. They'll probably perform extremely well in the future as well. But if you're looking to add some new position to your portfolio, then you should be digging a bit deeper. Look at those, for example, PayPal's of the bunch, right? A good company, in my opinion, that has been beaten down. Actually, the whole fintech segment has been beaten down quite heavily. That's just an example. Many other companies, dividend-paying companies, REITs, etc., etc. We've covered that on this channel lately. I do believe you can find very, very good deals for the future. Now, that said, we've seen what happened in August, right? Great 7.5 months for 2023. And then we have 1 month of being red. I mean, that's pretty healthy in my opinion, especially during the earnings season. You get more information, more guidance, etc., etc. You can rebalance if you want. And of course, we're still in summer months. Not a lot of traders are at their desks. Expect even more movement towards the end of the month, beginning of September. Now coming back to Nvidia, which by the way was basically flat the day after they reported earnings, and currently at the time of making this video, they are a little bit down pre-market. Coming back to Nvidia, just showing that the AI bubble might burst for the whole AI shtick play, whatever you want to call it. I do still think that there is going to be real momentum for the actual real companies that are making a lot of money in that market. And so Jensen Huang in the latest earnings call, the world has something along the lines of about $1 trillion worth of data centers installed in the cloud, in enterprise and otherwise. And that $1 trillion of data centers is in the process of transitioning into accelerated computing and generative AI. We're seeing some simultaneous platform shift at the same time. One is accelerated computing, and the reason for that is because it's the most cost-effective, most energy-effective, and the most performant way of doing computing now. So what we're seeing, and then all of a sudden enabled by generative AI, enabled by accelerated compute and generative AI came along. And this incredible application now gives everyone 2 reasons to transition to do a platform shift from general purpose computing, the classical way of doing computing, to this new way of doing computing, accelerated computing. I mean, a lot of computing here. It's about $1 trillion worth of data center, call it $250 billion of capital spent each year. And so you're seeing the data centers around the world taking that capital spent and focusing it on the 2 most important trends of computing today, accelerated computing and generative AI. And so I think this is not a near-term thing, this is a long-term industry transition, and we're seeing these 2 platform shifts happening at the same time, which is why I said before, the backlog might not just be 2-3 quarters, I mean the momentum, it will probably be 2-3 years even more. Now, I'll come back to the other point I mentioned. The competition is not sleeping on this trend. For sure not. The likes of AMD, even Intel, they're not sleeping on this. And even the bigger companies, the Amazons, the Microsoft, the Metas, etc., they're not sleeping on this at all. So expect some changes in the next coming quarters, if not years. I don't think Nvidia will get the whole market by the end of this decade. There will be multiple winners. Of course, they might still be number one, but I think that the pie will be cut into more pieces. The last thing I want to show you here is basically, well, the financial metrics. This is on Coifin, by the way, if you want to try it out. Link will be down in the description in the pinned comment. So Nvidia, Intel, and AMD, price to earnings ratio in the next 12 months, EV to EBITDA, price to sales, and price to free cash flow. Basically, what I want to show you, this is the last 5 years again. You can see that all three are actually pretty close when it comes to price to earnings ratio. Especially Nvidia has come down heavily because of, well, that huge beat. Now, you can also see the mean here. So Nvidia right now, price to earnings ratio in the next 12 months, 31.6 times. The mean in the last 5 years was 41.4 times. So you could say, a bit cheaper, but still expensive. AMD, 30.3 times. The mean in the last 5 years, 37.8. Now, Intel is the only one where currently the PE is higher than its mean in the last 5 years. And that's, well, we know why. That's a huge transition in the company. But I do expect that number to become better in the coming quarters. Moving on to EV to EBITDA. Nvidia, 37.3 times. The mean, 43.5. If you look at AMD, EV to EBITDA there, more expensive than its mean. And Intel here is the same thing, 11 times. The mean in the last 5 years, close to 8 times. If you look at price to sales ratio, Nvidia's price to sales ratio right now is a bit higher, 16.4 times compared to 15.1. AMD 6.6 times compared to 6.2. Intel is now 2.4 times compared to 2.9 times. So basically, and then you have free cash flow. It's a bit of the same. Nvidia here right now 113 times. I mean, the mean the last couple of years were 72.8. But even though Nvidia right now is extremely expensive, if you look at those metrics, right, and you look at the mean, I mean, Nvidia is doing pretty well right now and growing much faster than before. So you can understand why it's getting that huge premium right now in the market. I mean, it is pretty clear. They are growing much faster than before. There is huge momentum. They have great margins, better margins than before as well. So, I mean, I do believe that the premium is justified, but it is still expensive. Now, if you look at the likes of AMD, for example, they will be coming out, I believe, in Q4 with a competing product to go against the H100. And I do believe that they will be taking some market share. So looking at their metrics, if we can see some reacceleration in growth in the next coming quarters, why shouldn't AMD suddenly go up extremely fast as well? I mean, the stock is now close to $100 again. So why not? And then last thing with regards to Nvidia, just on a technical thing, this is a bearish diversion, meaning the stock itself goes higher, has higher highs. But if you look at the RSI, that doesn't follow that trend, which means usually the stock will go down or blow off some steam. Just putting it out there. I'm not a chart specialist. I don't have a crystal ball, but sometimes I do like to look at those type of things to get a bit more information because, hey, the market makers, right, the guys with the big money, they do look at those charts. And, well, if they all look at the charts, then they will basically decide what happens in the market. So sometimes it is pretty good to look at the charts. But, of course, do share your thoughts down in the comments below. Do you think that the AI bubble will burst? Do you think we're in a stock picking market? What do you think about AMD as an alternative to Nvidia right now? Or maybe some other picks out there? Let me know down in the comments below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.